personally, I ditched swing trading shit, and that's kind of how I got my break in the market back, sheesh, a couple years back now. When the COVID dropped and I came in with some money that I just got from starting working and all that, swing trading was the move, and I just stopped because it was not working for me. I kept on losing my money. I thought I had the best setups in the world, and none of them played out. And guess what? That can totally happen. You can't think about the market in a rational way when it's irrational as it is. So I kicked swing trading to the curb. I would love to get back into it, but it truly is kind of a scalper's market. And I know most people that we're trading with on a day to day right now. We're doing the same thing. I just don't feel comfortable coming in with any bit of substantial money and holding something for a prolonged period of time right now.
Yeah, it's very difficult. Can you hear me okay?
Yeah, what's up, Atreyu? How's it going,
I
man?
think I think you got in at the wrong time. It was like, what do you say, 2018 or 2020?
Oh, so I my story is it's a little whack, and I've told it a few
Yeah.
times, but I started to just learn about it early in like 2018. I was in grad school at the time. I just finished up college. um, I went into teaching, and, I wasn't really too crazy about, the situation I was in. I was an assistant in a classroom, a special ed classroom. And, it was hard. Like I give credit to anybody who does that, but that is not an easy gig. So I was like, there's gotta be other ways for me to make some money, maybe even just speed up the process so I don't have to do this forever. So I started to
And
learn.
you found options, right?
Yeah, it actually started with Commons, man. So I just started, and obviously, coming out of college, I didn't have money or really anything at that point. So I really started to learn, and I was buying like fractional shares of things and just flipping them real
Hmm.
quick, like $20, little things here and there. But that was a good learning experience for me. But believe it or not, like COVID kind of, it in a way kind of benefited
I
me.
think it accelerated a lot of people's growth, right?
Yeah,
Because they had more time. So now you have to think, okay, how am I going to make some money?
no,
And find your strategy.
100%, man. Like
Yeah.
when COVID happened and we started to work from home, I just had
Mm.
way more time. And instead of me like kind of playing video games all the time, which I was back when like Fortnite was popping off and everything like that. And I was just getting out of college, so I had to like slowly wean myself off of that lifestyle. But
Yeah.
instead I kind of just placed my energy elsewhere. And at that point, I was like 2 years into working, not making a lot of money by any means, but I had some money, and I said, you know what, like after that big COVID drop, let's go in with a substantial amount of money.
Yeah.
I'm going to hold this for a long term. I had no idea how quickly it
Yeah.
was going to recover, but that actually gave me such a nice jump start that I was able to kind of get into it. And I had thankfully, I had some good people, KD being one of them, who, he's younger than I am, but he'd been in the market for longer than me. And he's like, yo,
Yeah.
like,
I keep on hearing good things about KD.
yeah, no, KD's a good guy, man. I've been trading
Because
with him pretty much.
I'm very flaky and who I follow. I don't know why. I think it's because it's very hard to, in this market, there's a lot of people doing a lot of the same thing,
Yeah.
and it can get a bit samey. So I'm like, I keep on hearing this person, but they're just talking about the same whole shit. You know what I mean?
No, I
It's
know.
nice to come across people like yourself that are like gonna talk about the journey.
Yeah,
To
no,
get.
I didn't even really plan on doing it, but it's just like, it kind of just goes to show,
Mm,
if you get a couple good people in your corner,
good people, yeah, exactly.
me one of them, like it's fine. Like, I always like to answer DMs and everything like that, because no one did it for me when I was trying.
Yeah,
So but anyways, like, KD, there were a couple others who were like, yo, if you don't really learn how to do this shit, you're gonna lose all that money you just made. And
yeah, exactly.
they
The
work.
best knowledge is investing in yourself, and that's what they don't teach you in school. They don't teach you. Uh, they don't teach you in finance even, unless you're going into that field.
No, I mean, I
When
graduated
you start,
with
yeah,
a management degree, and I knew
nice.
terms and everything like that, but I didn't know how to run a business for shit. I mean, like,
Yeah,
truly,
exactly.
it's like, they'll give you the textbook, but until you're really in the mix, you don't really know what you're doing.
No, it's like a learn on the job kind of thing, isn't it?
Yeah, no,
And you
exactly.
learn every day in this market. I mean, like you just can't guess it anymore. I mean, you can analyze, you can look back at the way the market's been playing out for the last 20 years and probably get a good idea of what's happening, you know.
Right. Yeah.
Current affairs, current world affairs, and everything like that can be a big part.
Yeah.
But
I think we're in unprecedented times, truly. I mean, we have all of this the issues with inflation. We have a war that's going on that, seemingly is less talked about, more and more. We have, we're still kind of just rebounding from
yeah,
some
but just
shut down the world.
I think sometimes you just have to think of that as noise, right? It's always going to be there, right? There's always going to be something going on. It's just the world we live in.
No, you're 100% right. And
When you're concentrating and you give yourself 100% into your game plan, there's no losing on that, you know, because you have that you if it's tried and tested, like it's a strategy that works for you, then it works. Don't deviate away from that. And if you're gonna get your capital and put it somewhere else, you want to do the same research you did when you got into options or you got into the stock market, you know.
no, you're
I
absolutely
think
That
because
yeah,
it's getting
that's where a lot of traders mess up at, is that
the noise.
you have all these people, and you have all these
Yeah,
people with way more experience, and then they're doing this making money and you're not. So you go start trying to do what they're doing, and then it's not making money.
you'll
So
lose
they're
money.
crap.
You'll
So
lose
you
money
just talk,
quick.
yeah, and you start talking crap about them, how they can't make money, and then you run over here to this guy and you're like, all right, I'm gonna do what he does. I'm gonna try his call outs, and you lose money, so he's crap. Instead
Mm,
of just taking one thing that you can kind of see and kind of make sense, and then
yeah.
just chart it every day over and over
It's
and
like
over
getting
and
into a
over and
stock, isn't
over
it?
and
It's like
over.
finding that stock that nobody's quite aware of, or like it's not popping off yet. But you're like you've done your due diligence, or and so you're able to think, right, okay, I'm going to do some options on that, or I'm going to buy some stock in that, maybe short term, long term, depending on the news, whether you want to day trade it or go long. You know what I mean? Does that make sense?
uh, the,
Yeah, I mean, you think about this. You could buy something, and I could tell you it's crap
Oh yeah,
because
100%.
I don't see it. And then the same for you. I could buy something, you could be like, man, I can't believe, that you would even do
Mm,
that. That's kind of like somebody asked me about Tesla when it started tanking. I was like, if it was me, I'd sell if I'm in the green. And then it rebounded up, and he was like, man, I wish I wouldn't have sold. And I said, I didn't tell you to
yeah.
do what I said. I just said, if it was me, because my emotions, I would sell.
When it got down to about 98, I think it got down to its lowest 98. Was it at $98? I think I remember calling it at 103. I was like, people, you need to buy calls for Tesla. Like, shit's gonna pop. You know what I mean? Because I just had a feeling, and I was looking at everything. Man, did it pop like yesterday? It was crazy.
it's so hard to predict that type of move too. I mean, we can have
But
all the
it couldn't go any lower, dude.
no, I know exactly. I mean, how many
Fuck.
institutions were bagged at that point down at 109? What was the pre-split level, Kevin? I know you know it. Where the
I think it hit 98, but I might be wrong. I know that I was calling it at like 103.
man, I mean, it's just so hard to.
It's such a hard thing. Yeah, it's not not everybody is able to do it, but if you're able to like have that, like it depends what stocks you're following, right? You just have a keener eye. You like things just make more sense. And to somebody who says like they're very bearish on it, that's fine. But there's always going to be people on the opposite side, you know, and it can change from day to day, right?
Oh, 100%. And I mean, that's one thing that I kind of, another point at least that I wanted to kind
Yeah,
of talk about today was that there's opportunity every single day. I mean, we see it, Timmy the other day ripping like 500%ers, like 100% is 100%, whether you are buying one contract, whether,
yeah, yeah.
and there's opportunities for everyone every single day. And sometimes I think that's why
You win some, you lose some.
yeah, and I call Twitter poison because you're going to get 100 different perspectives. You're going to hear 100 different, people on spaces. You're going to hear or see 100
Exactly,
different charts, and it's always just going to cloud your own judgment. And I mean, if you're
exactly.
confident in yourself and you actually put in the work to, formulate your own thesis and stuff,
Yeah,
why are you listening to anybody else? I mean, that should be the goal for everybody, including me.
yeah,
Sometimes
100. Yeah.
too, KD and I don't agree, and I'm like, maybe I got to think a little bit more
But
about
it
this.
makes you it makes you think. It makes you analyze why he has that certain thought on that matter, and you're like, then you can counter argue that. You know what I mean?
No, and I just saw there's a really good trader on here, Inspector Gadget. He just tweeted a little while ago. There's always a bull case and always a bear case, and that is 100% true. And I like
Yeah.
saying, "Oh, this is going to here, buy here."
Yeah, I mean, I got
it's a risk.
into an argument with a guy last night, and it was like a soft argument. Like, it wasn't like we weren't actually going at each other. It was just like a case of like a bull case.
Difference of opinion, yeah.
Yeah, difference of opinion, and like I was like purposely egging the person on, and I was like telling him, I was like, "Yo, look, I want you to come back at me. Like, I don't want my voice to stand alone. Like, you have a clear difference of opinion. I want us to talk it out. Like, I think,
You want to hear what he's got to say, right? So it may change your mind on it or not. You know?
Yeah. I mean, at the end of the day, like, what he was saying I actually like wholeheartedly agree with. It was just like, because he was basically saying, this is like arbitrage, and I said, yeah, it is kind of like arbitrage, but there's different points of looking at it, and yeah, we just kind of went back and forth on that, and I was like, is it good arbitrage? Is it bad? Does it help us as investors? Does it hurt us as investors? And yeah, I mean, I agree with his viewpoints at the end. It was just like I always look at the thing as like when Mando was talking about it, like iron sharpens iron, bro. Like, me having a difference of opinion should not influence you at whatsoever. Like there was yeah, I'll leave it there now.
You're spot on with that. I mean, it is good to have people who you can bounce ideas off of and trust in them and their opinion and things like that. But at the end of the day, I mean, it's your money. No one else cares.
It's all about you, yeah.
Yeah, no one cares about you more than you. So
it's nice to share. Like, I think that's what I think that's why a lot of people like to share their path to success or what they see as an improvement on their knowledge they learn, right?
yeah.
So there's nothing wrong with that, and that's good, and it provides a bit of like entertainment to the community. Okay, yeah, it might be a bit of a clout thing sometimes, Oh, look, I won out of here, But you have to be prepared to show your losses as well, and I think that's where you find the genuine traders and the the ones that are in it for themselves.
Yeah, no, I mean, it's totally okay to be wrong. You're probably once at least every single day that you're there.
You have to be more okay with saying, all right, I'm wrong, than all right, I'm right. Let's see where this goes, because especially young new traders, you're going to be wrong way more than you are right. So if you can eliminate losses because I'm wrong, it's not working out, I'm wrong, then get out instead of saying, well, it'll come back.
I think that's a society problem to be honest. So no one wants to be wrong. No one ever wants to take ownership of their losses. I mean, think about it. I always retrace sports and all that, but like, think about it. Somebody makes an error in baseball. What's the first thing you say? Oh, it took a bad hop, or
they don't own that loss. That's the
bro. Everybody makes friggin' mistakes.
I was actually talking about. I opened a space about 2 hours ago, and then somebody said, "I can't hear you." So I don't know if you've ever had that issue on spaces, but I was talking about like the reasons why day traders, or especially new traders, lose money. And there's a ton of reasons. One
of the main reasons is, though, you have to, like, example is like what you guys were talking about earlier. It's like, yeah, you could follow anybody under the sun that you want, but like, at the end of the day, is like you have to come and realize what strategies best suit you.
Exactly. Yeah.
And that's not going to be the same as like like my mentors who taught me. My strategies are completely different than my mentors. Like,
yeah, and you should.
And it's not necessarily a bad thing, right? It gave me a viewpoint.
No, that's a good thing.
Yeah, it gave me a viewpoint. And so, like, it goes to me for saying, like, man, I was talking about, like, swing trading is really hard right now, and I agree with him. Swing trading is really hard, but like, it's kind of like the irony in that sense, like, swing trading really hard in the traditional finance stock market is really hard right now. For me, I'm pretty diverse across like multiple asset classes, and for me, swing trading in crypto, I've been fucking murdering it. Like, I've been buying Ethereum at like, sub 100. I've been buying Ethereum at 1,200. The other day it hit like $1,700, $1,600. It's still trading about like $1,500-$1,600. And then it's like,
is it following Bitcoin? Because this is what like keeps me away from the crypto market. I know there's money to be made, but you know, when you hear articles or people discussing like it's following, like, you know, if Bitcoin's going higher, then Ethereum's doing better, you know, that kind of thing. I don't, that for me is.
See that for me, kind of, I harken back to what my mentor talking about me is like a lot of stuff that you hear on a day-to-day basis is white noise. You got most of it you got to block out. Like yeah, and I think you kind of touched on it too, though. You're touching on like the fact that like you don't really follow that many people because you don't want your Twitter page to be, or your feed to be
the same thing.
yeah, exactly. But like the same with me. I mean, I purposely keep my numbers down, not for like
I'm trying to, but the problem is when you followed a lot of people at first, it's hard to get that number down. You have to like just weed them out.
Yeah, no, I've definitely done it. Like, dude, I've weeded out crypto accounts that I don't really like. No, dude,
I do like them NFT people though. Like, I don't know why. I follow a couple of them because I'm interested.
Yeah,
I find that really interesting.
I follow more of like the NFT memer guys, but
yeah, exactly.
To like lighten up your page because like they always come on the even
well,
if
it's just something new. It's different on the feed, isn't it? You're like, ooh.
Yeah, well, no, but
what's going on there?
They're a special type of breed. I mean, like
yeah, definitely.
They could be like -5% on the day, like on their entire portfolio, and they would still be willy nilly happy. And then you like go to like then you go to the FinTwit that like we like in air quotes grew up on, like the last 2-3 years in FinTwit, and it's like if there's a -5% day on SPY, God willing that doesn't happen. Dude, we would be like killing each other. Like there would be like a fight breaking.
Do you know one thing about the way FinTwit was back then and it is now? I think it's better because a lot of the people that were calling stocks, calling their trades and everything, they're not here anymore. They're not relevant. And now you have the real people that got in and were being mentored that had to go away and start learning for themselves, really, because either they were losing money or they weren't making enough money. And they had to develop their own strategy, So now you have like these young people like yourself coming out of college, put a bit of money in, and now you're like, okay, this is going to be my strategy going forward. I'm going to try pass that knowledge on to people that join my space or Discord or whatever. You know what I mean?
No, exactly.
But it's the best time.
Is like back in 2020, there were very, very few people who actually traded to the downside. So when everybody was up, the whole market was green. And when everybody was down because nobody was trading to the downside for the most part. I mean, at least the people that I was following back then, everybody was trading the same type of stuff where it was, penny stocks. Yeah. No one's, naked shorting penny stocks.
I love a good penny stock.
Yeah. Oh, so I mean, it's definitely evolved in a way where now I think people are understanding of your ability to make money on the downside, upside, whatever. And if you did not learn how to make money on the downside, all of last year, you probably had a really rough year. Even people who did play the downside still got ripped on some of these, bear market rallies that we saw.
Well, have you heard the quote that over 90% of daily day traders, especially new ones or ones that are trying to learn, actually lose money, and there's a reason for it. They want money now. They want quick money, and they're not willing to put in the time to learn. They're not willing to put in the time to read a book. They're not willing to follow people like yourself, other people in the FinTwit space or whatever, and invest in their knowledge and learn from them. This is why they lose money.
Oh, you're spot on with that, man. And anybody down below, if you guys have any questions or anything, feel free to come up. I mean, I kind of just, we usually do these where we sit down, just, see what we got for the next day coming forward. And obviously, we're heading into a bigger week. So I figured, let's move it on over to Twitter. I posted all the charts anyways that I was going to talk about. So at least we got something up top that we could take a look at that way. But yeah, no, man.
You said there's a couple of earnings. You were mentioning them.
Yeah.
So you want to know what you're looking at Wednesday? See what they've got to say on Wednesday.
Yeah. To be honest, I mean, it's always tough, and again, that's why I'm really not swing trading. And honestly, weeks like this, a lot of good traders that I personally learned from, they just stay away. Like they don't mess with weeks with big earnings like this, or economic when it just seems like every time economic data comes out, it shifts the whole course of where we're going over the next.
Yeah, it shakes up. Yeah, I think like you've seen Tesla, like obviously fly for what was it, 5 days in a row.
Yep.
I think you're gonna have a little rug pull on Wednesday. I think not everything's gonna be all gravy. You're gonna have a small. You'll have a pullback.
I read an article in Twitter. Whenever I clicked out of it to I was gonna retweet it, hit Twitter refresh and it was gone. I couldn't find it, but they had billions and billions that magically inflowed into Apple and Amazon and one other company. So I don't think, unless Powell is this super hawkish, like he plans on crushing the market, I don't think we go anywhere. I think they burn everybody playing FOMC, and we wait on earnings. That's kind of what I see.
Yeah,
very possible. Yeah, I mean, we do have some big ones Tuesday.
Did you watch guys? Did you watch the documentary on Bernie Madoff?
No, I haven't watched it yet.
Oh, you have to watch it, dude, because this guy was part of the SEC. He was he had his hand in FINRA as well. Obviously, it was a big Ponzi scheme at the end. It was like 67 billion, and they suspect it was more than that. Big Ponzi scheme. He had he had the real trading business at the top of the tower he had, and then underneath he had something called the 17th floor. His sons weren't even allowed in there, and his sons worked for him. And it was just like fake trading. They never traded. They just said to the people, yeah, people wanted to take some money out, they let them take it out, but they always had to cover it up.
Yeah,
it's crazy, and that's nothing. This is, I reckon, there's bigger fish to fry in the market. You see all this money flooding in. Where's it coming from?
I mean,
yeah.
People like Bernie.
Well, you know what, Bernie Madoff, he screwed over my Mets. The Mets ownership group, they were investing with Madoff. They lost a shit ton of money. So I'm a little scarred on watching that, just based on the pain that I already had to deal with for 10 years, because they couldn't put their hands in their pockets and
such an eye opener though.
Of it. But yeah, no, I mean, that's on the largest scale. Think about, I mean, even when people like glorify,
that was just one person. He managed to fool people for like what, 30 years, 40 years,
right? And people glorify like Jordan Belfort and stuff like that. Like, dude,
yeah, he gets on my tits.
Yeah, that dude screwed over people like us, like middle class Americans, bro. Like, that's who is getting roped into his scheme. Like, yo, I don't personally think that's cool, but whatever. I mean, it is what it is.
People that I look at is like people like Michael Burry, who's he was they had a movie called The Big Short on him, and he was how he felt like the housing crisis was coming about, and there was other factors in place, and they made a movie about him, and it's such a good movie because it's about how he shorts the market, and he was putting in hundreds of millions, and he won out for all his investors, walked away. He's so funny. He's so interesting to follow on Twitter as well.
I know you see these come and go all the time. I mean, we just recently had that other one that occurred. I don't even want to talk about, but Lion, I think you had a question or something you had to bring up.
Yeah, I was going to mention something. Yeah. So I was having some beers with a neighbor of mine, and he was telling me, he was trading in the bull market, and he was just investing, buying random stocks. And the next day he would open up his account and he'd be up like 20% on his portfolio. It was stupid. And, it just goes to show you how different it is investing in a bull market versus a bear market like we're in. You have to be strategic in this kind of market. But, just like the bull market, things are seemingly always going up with a few pullbacks. I mean, as long as you look at the overall trend, like, in this market, if you're not watching the SPY, the S&P, the dollar, when you're buying a stock other than one of those, chances are you're going to lose. If you watch the trend you can kind of see, okay, my XYZ random ticker is going to go down because SPY is going down, and just seeing that overall trend, you can actually profit in the bear market when everyone else is losing on their long-term portfolios. That's basically.
No, when I tell you, I'm not even no funny stuff. In 2020, everything that I bought when I first really started to deploy some capital, everything went up. So it was easy, and I didn't really know as much as I probably should have, but it was quote unquote easy, man. I mean, things were just going up, so it's like, oh, one down day, you're like, whatever, it's gonna go up tomorrow, and 9 times out of 10, you're probably right. I mean, I think that was really kind of a bad time in a sense for people, in that, like, if you didn't expand on your knowledge during that easy time, now we're trading on like Hall of Fame mode if you're talking like NBA 2K or something like that. I mean, this is definitely not easy. Although over the last couple of weeks, I do feel like it has been a little bit easier, but
Sure.
it's just very market sensitive right now, where anything that comes across on CNBC, a Jim Cramer tweet, that shit moves markets, and that is crazy to me.
Always bet
Absolutely.
against Jim Cramer.
Yeah, inverse Jim Cramer.
Absolutely.
100%.
But anyway,
Yeah, you should follow their account on Twitter. It's so funny.
Hey, how many people inversed Meta? Got burnt.
That's very true.
No.
When was that? That was 2 days ago. He said something about Meta.
Yeah, he just tweeted buy Meta.
Oh boy.
Yeah.
Well, they
Oh shit.
Wednesday after, so we'll see how that goes. But anyways, I just want to throw these out there right now. Just ones that I'm at least kind of keeping an eye on. Not that I'm gonna play them. I used to play like 2 or 3 a quarter. I'm done with it. There's no need for me to do that anymore. But we got ExxonMobil Tuesday pre-market, Pfizer as well on Tuesday morning, and then after hours AMD on Tuesday. And I have a long-term position in AMD, so I'm going to be watching that one for sure.
What did they do?
AMD with the semiconductor chips.
Oh, okay.
Yeah, no, I don't know. I always like try to extrapolate and think more than what they're like talking about right now. But like when you talk about like the robot future and everything, I think AMD's got a place. So I like AMD for that sense, with the semis and everything like that. But anyways, yeah, and then we got after hours Wednesday. We have Meta, another company that I like long term, but to me, it's not anywhere close to where it needs to be. I like them solely on the fact that they're actually considering innovation, whereas companies like Apple and Microsoft is making moves as well with that Chat GPT stuff. But Apple, I feel like they're kind of just stuck in the mud right now in terms of innovation. Every year we're getting the same, maybe a little different, but you're getting the same looking iPhone, you're getting the same looking laptop. I feel like they're kind of just chopping around right now.
With their investment in Chat GPT, is it are they going to have sole use of it?
I'm not totally sure.
It was a couple of $1 billion investment.
$10 billion in whatever.
$10 billion, yeah.
Yeah, I mean that's
because they said they want to implement it into Bing search, and I'm like, who the fuck uses Bing search? Like,
well, yeah, they're gonna try and compete. Yeah, Bing. I remember
that kind of thing.
The day it used to come up, I'm like, what the hell is this shit? And I had to like go back into back to Google.
It is actually funny.
You go back to Google and say, "What is Bing?" Question mark.
It's funny that the same week that Microsoft says that they're trying to re-up their investment into Bing to try to kind of compete with Google. Google gets the lawsuit from the government saying that they have a monopoly over the internet because of Google Chrome. So it's just kind of like great timing.
Well, they had that Activision and stuff dropped, right, KD? So Microsoft is gonna be booming in gaming, huh?
Yeah, I still haven't confirmed that though. To the best of my knowledge, yeah, somebody dropped in my DMs that that the Microsoft lawsuit from the government, blocking the Activision acquisition was revoked. I haven't looked at it further though.
Damn. Yeah. Well, anyways, I mean, after hours Thursday, Amazon, Apple, and Google. Yeah, so that's gonna be an interesting day for sure. Friday, not so much. I mean, there are companies, but nothing that's really sparking my interest. So, yeah, I mean, it's gonna be a hectic week. I'm looking at it from the perspective of keep those stop losses tight and keep the trades short. Usually how I like to go into that, on a like, looking into the week ahead. But also, I mean, not only do we have that Powell stuff on Wednesday, we got Friday, that non-farm payrolls that always seems to be a wicked market mover. That's coming out Friday morning pre-market. So just a lot of stuff going on. And again, like I said before, we are very like word intensive in the market right now, where a headline comes across on CNBC, or so and so dropped something on Twitter that came across their Bloomberg terminal. Like, the market reacts to that very quickly, and your setups can get busted just as quick. So having a
Did
plan.
you say Bloomberg terminal?
Yeah, somebody having that, they'll be posting that.
I think it doesn't it cost like £100,000 a user?
Oh yeah, it's big.
Dollars.
I don't even know. I've never even looked at it. It's definitely not
I've always wanted to get my hands on it. I'm just like, what have they got? Obviously, they got more information. That makes sense than the market, but they can use that to their advantage, right? They can just.
Oh, geez. And that's why, like, you know what? At the end of the day, like, you have all these hedge funds, institutions. They have every resource in the book.
Yeah.
A Bloomberg terminal. They have people literally paid hundreds of thousands of dollars to be doing research and all this crap, and
yeah,
like fighting
solely their job to do that.
Yeah. But, like,
hey, on Bloomberg, like on the FOMCs, people that do have it, they have the live just audio. Then they have the live event. The live audio is 20 seconds faster than the live event.
Wow.
Oh, so they're ahead of the market, like,
right.
Yep.
Yeah.
But it's interesting, even with information that comes out, it's not always necessarily going to go the way that you believe it's going to go. I mean, that we see that all the time, But yeah, I mean, anyways, I'm gonna throw up some of my charts that I got heading into the week, and kind of just see where we're at. Hold on,
Mando,
Yeah, what's up?
can you tell us a little bit how you come up with those levels on like SPX and SPY, like just
Sure.
kind of your thought process and where that comes from?
Yeah, absolutely. So it's not like I created this method by any means. And for anybody that would be interested in learning how I, get my levels and everything like that, literally just type in ICT onto YouTube. This guy, he's pretty incredible. Again, I've had success in the market over the last couple of years since I've really been diving into it, but I would always go through that, that stretch where, you'd have a day that's just wicked, make a ton of money. And then over the next couple of days, you kind of give quite a bit of it back. And that's something that going into this year, my whole, mindset was about discipline. And we talked about this in the group quite a bit. Like, this year, I'm going to be much more disciplined, not only in trading, but just in life in general. I'm going to be going to the gym. I'm going to stop drinking freaking energy drinks every day of my life. I'm going to set more parameters for my life so that when it does translate into trading, it's going to be more beneficial to me, because I would consider myself like a freaking gunslinger, man. I would go in, I would make a crazy big gain on a trade, and then just, slowly watch it bleed out here, little bit. And I ain't doing that anymore. And already just in 1 month this year, I mean, we've been in the group talking about it. Like, my red days, so far this year, since January started, I've had 3 red days, and I've kept those very, very minimal. I had one on Monday that was my biggest of the year, and it was nothing near what a red day would look like for me in 2022. So just having these levels, and this is where it all ties in together, it's giving more of a structured game plan in terms of not only your targets to the upside, but also an escape plan if shit does not go your way, because that happens way too often, where you get into a trade and you have a level here and it slips that level, but then you say, oh, I have another support level right here, let's see if it bounces off that level, and then it chops around there for a little bit, and then you get your hopes up, you're already red on your contract, and then you get another knife down, but you have another support level there. I call that quicksand. That's when you just keep getting dragged under, hoping that you're going to get the bounce that seemingly never comes. So for me, I know I can make that money back quickly on a trade that does go my way. So my levels, the way that I have them structured, is really just under a certain point, I'm out, and I try to enter as close to that point as possible. That way, even, I don't have a specific, stop loss percentage. It's just what I'm seeing on the chart. But to get into how I'm kind of making them and creating them, I can get into that right now. So I'm going to pull up my chart here, and what I'll do is I'll post one of my charts so you can kind of see as best as you can. I wish I could screen share on here, but I can't. Let me do this. All right. So for instance, here I have SPY right up at the top in the nest. Essentially all I'm doing, and this can come from many different time frames. One that I found success on recently has been the 30-minute time frame. And on that 30-minute time frame, I'm looking for large imbalances, whether it's to the upside or to the downside. And what I mean by that is, when you see those, everybody on FinTwit likes to call them the boner candle or the knife, right? So what I'm doing off of those candles is I'm seeing the imbalance, and the imbalance is the point of those candles that are untouched. So if you look at the image above, you'll see on SPY, let's see. So I wish I could screen share. This is a pain in the ass. So right where that green box right in the middle starts up to that 405.61 level, you could see that in between the one up candle following that down candle, there we have another strong uplifting green candle into another more of an indecisive candle, like the little green body candle right there. So what I'm doing is I'm using those imbalances as my levels of support and or bounce spots, right? So the reason for that is because inside there, no wick had ever come inside that level, right? And in between, we can assume that that was strong buying pressure, more to the bullish upside, rather than when you get two long wicks that completely cover a body. That's just going to leave everything is balanced in that area in terms of price. But when you get those imbalances that are huge like that, you'll see that they often act as bounce levels. So if you scroll over down to the bottom left, where we created a gap on SPY, and to go off a little bit, but when you talk about overall charting and where I'm getting my levels, I always speak in terms of ES or MES, and those are the futures. And the reason why I look at the futures charts rather than looking at SPY or SPX, what I actually trade, they're going to move the same, but the difference is on MES, ES, you're only getting a 1 hour window during the week because it trades 23 hours, 5 days a week. You're only getting a 1 hour window where you're going to get gaps created, right? I don't like gaps personally. I mean, you hear it all the time on Twitter. Oh, it's into a gap, it's going to fill. Well, no, not necessarily. We've seen it 100 times. Sometimes they just they slap down whether it's a dark pool print or a huge order block right at the top of that gap, and it's not a smooth rip right through the gap. So I like to chart on ES or MES because in times where gaps are being created on SPY or SPX, you're actually getting the full story on charting futures. There are many key levels that are created in the overnight session that many people don't even see because they're looking at a gap. So that's why I like to use that rather than, just SPY or SPX. But anyways, you could see that it created that little gap up, and that would be considered an imbalance. We dropped back into the imbalance and we took off from there. So when that price gets balanced, oftentimes you'll see a bounce. Now, does it always happen? Of course not. No indicator's 100%, because if it was, then please send it to me because I would love to use it. But you have an escape plan. If we're going to break below that green box right there, I'm out of there, right? And I'm going to try and add as close as I can to the bottom of that so that my loss, it's not substantial, right? So if I can keep my losses small with increased upside potential, I'm going to take that all day, every day. So going back to what Lion said, in terms of me doing that, I've been doing it in the group a lot where I'm throwing out a number, and that number, oftentimes tends to act as a magnet for price. That's just an imbalance that the market or the market algorithm is pushing it towards. So you see, like, 2 days ago we had that 40-70 that was a total pain in the ass. We couldn't break that. That was just a brick wall. So having that in the back of my mind, I know, hey, if I could snag a put right here off this large imbalance, I can ride that down a little bit, even if it's only to the bottom of the imbalance shown. That's still some good coin, right? um, I refrain from hitting that big homer nowadays, where your singles, those little, whatever gains they are, you add them up over, even just a week, then you could start, you gain some speed, those singles become doubles, when you have, maybe add one more contract. With the ability to add one more contract, maybe you say to yourself, I do think it has more upside. I have a level up here. You're going to feel more comfortable letting one ride when, you're already secured some profits on the way up. So that's ultimately, when I'm talking about the levels or the specific spot prices, that's solely just me just finding imbalances on the chart. And it's not very difficult, but I think it definitely takes time to understand how price is going to react within said imbalance. The more times you get into that imbalance, the more it gets filled, and then you could see a move through it much easier. So I know that was long-winded, but Lion, does that help you?
That's really interesting, man.
Yeah. So
That's great.
people using technicals, whatever it may be. Let me tell you, I have tried everything in the book, and you say that, they're profitable strategies. 100%. I know a ton of people who make money using technicals. I know, people making money off of options flow, dark pool, order flow, volume, price, whatever it may be. You can totally make money off of that. I'm just saying, just from my experience, this is giving me that extra layer of structure that I needed as a person, because for me, I was gunslinging it, man. I would have crazy days, and then I would also have, crazy bad days. So that's my mission. I gave back too much money that I made in the market last year, and I ain't letting it happen again. And I think just it was
hell no.
I'm all I trade. If we go into my my statements and everything, I think I've traded 4 tickers this year. SPX is the one that I trade every day, and that's pretty much all I'm trading. I think I've had a couple SPY trades where if I'm up solid on a day or down pretty bad on a day, I'll step away from SPX because it is a little more intense, and I'll trade SPY. NVIDIA, I took 1 trade on NVIDIA, and I took a Boyle swing, and stupid me, it didn't work out. I thought we bottomed on Boyle, and we didn't, and I lost on it. But other than that, man, I keep it as simple as possible. And you could do all these same, methods and everything like that. You could do it with whatever ticker you want. Again, there's gonna be gaps and stuff like that you have to account for. But with ES and futures, and I have a futures account. I don't use it as much, but I'm still doing all my charting on there. It's gonna move the same. I wish the numbers lined up perfectly to SPX. They don't. So I'll be saying a number. I always got to make sure I put ES on it, and when I try and track it back to SPX, it takes time and stuff like that. So it's annoying, but that's ultimately like the game plan for me, and that's what it's been. And I try to keep it as simple as possible. So I find those big imbalances on the 30, and I like to drop it down into a 5 and a 1 minute chart. The 1 minute is the most, spot on for me in terms of entries and exits, just because that algorithm that's controlling price, it's operating on a very low time frame. It's not operating on a 30, 45 minute, 4 hour. It's operating on a very small time frame. So
I have a question for you.
Yeah.
So are you talking options here? I'm asking because I'm not familiar with
I'm just talking
SPY and everything.
Yeah, man, I'm talking overall charting, but of course you could play options. I mean, that's all I play at this point.
So what this is what I've been trying to establish and learn. I don't know too much about options. I'm just gonna put it out there.
Yeah, no, it's all good.
What is it you're looking for? So when you find it, when you see a contract or you see like a call or a put, what is it that you're looking for? Like in terms of like do you look at the volatility? Sorry.
Yeah, no. And this comes
Like
with
what
experience.
is it you're looking at?
This comes with experience for sure, but
Yeah.
you'll see on days with big data drops, or even if we're talking about just an individual stock, like you'll see certain days, whether it has earnings or a news drop, or Lucid, for example, yesterday, I bet you that IV was crazy. So when the IV on these contracts of say individual equities, when they're above like 100, I try to avoid them. I mean, or I used to try to avoid them. I don't trade them at all anymore, to be honest. I'm strictly, focused on the S&P.
Wasn't it running into the thousands yesterday? I was in a
Yeah.
space and they were like, "Shit, it's up! Like it's gone up again." And I was like, "Oh,
Yeah.
I kind of understand what they're saying, but I don't."
Right.
Yeah. The contracts ran like some 60,000% yesterday, which, honestly, if I'm gonna be straight with you guys, that absolutely pissed me off. And it didn't piss me because it didn't piss me off because I wasn't in it. It didn't piss me off because the people that made money that actually got into trade and stuff. I was mad because people were playing Lucid as a sympathy to Tesla running up, and then like Lucid, of course, on the day that everything's green, decides like, yo, let's drop this, perfectly, timed news right now so that everybody will, come flood and buy our stock. And then obviously everyone comes running in, and price, skyrockets to the moon. I mean, like Mando, I'm not going to share, that story you shared with us, but there's that incident you were telling about yesterday, which I was like, are you serious? But like, yeah, I mean, because it's like when you look at Lucid, like I like to look at fundamentals. I like to look at technicals. I like to try to be as well rounded when I'm making trades, looking into investments, etc. Like honestly, like we talked about it on Clubhouse yesterday. Like we don't discredit that Lucid long term is going to be a great company. It is going to succeed. The Saudis are not going to let Lucid fail, but there's no denying that the market cap for Lucid absolutely is dog shit. Absolute dog shit. I mean, you're talking about a $28 billion company that barely scratches the surface on sales, let alone like actually getting to a profitable zone. And I'm like, dude, what the fuck? Like even fundamentally too, it's like everything about that company is has a flaw to it. Like the fact that when you're talking about building a company in Saudi Arabia, you're talking about like importing rubber. You're talking about like importing lithium, and then like, dude, these things like come with expenses, and it goes to say that like long term, the Saudis are not going to let this opportunity slip from them. But like, there's a lot of things between then and now, and the fact that news popped off Lucid as much as it did, I was like, dang, that's insane. I wanted to get on the flip side, I didn't, I missed it. But yeah, it's my little spiel there.
Yeah, no,
it's a sexy car though. Can't deny that. It's better. It looks much nicer than Tesla.
I mean, but anyways, I mean, you get these like crazy like IVs and everything like that. Those are contracts but those are the ones that get crushed as you approach expiration.
Didn't it go up to 18 and then drop to like 12? 12 nice.
Yeah. Started the day at 1065, went up to 1850. Yo, I totally just
is that just people taking? That's just people taking profit, right? That's just pure like people day trading it, right?
Yeah, you could. I mean, so I had a buddy who played it and he made a ton of money on Lucid yesterday. And he wasn't one who really, is like so super in tune with like options and how they work and everything like that. And he
bought, yeah, let's go.
firing on.
Hey, I want to comment on the options. So my deal, I tracked small caps for a year. I tracked a couple patterns through the 2020, 2021. Then I jumped in and market went to crap, so none of that worked. And I jumped into options. I know about volatility. Other than that, I know absolutely nothing about options. I day trade them. I don't swing. I mean, I'll hold overnight sometimes, but I don't know the Greeks. I can't tell you the Greeks. I know that on SPX, I trade it because of tax purposes. You get in a special tax bracket and pay less taxes with SPX. But they're just patterns, and I like to stay in between the $2 and the $4.50 contracts. Besides, at the end of the day, I'll get into the dollars because they will.
How much do you have to have in? Are you literally buying them for that amount, or do you have to have a certain amount of funds into your account?
Yeah, I mean, yesterday, I was going to buy a $10 contract on SPX, and that's way, way, way out of the money. And it was a put a call. I'm a bear. I can't buy calls for some reason. Like, even though I can talk,
yeah.
I could talk through you to why the long and walk you through the steps and where to get out, but I can't buy the call. So I bought a put, and the call was going to buy was 10, the put was 10, and the call went to over $1. So I mean, everybody could talk about the Greeks and how you have to know them. You're not a trader if you don't know them, but I mean, honestly, I have a small account I post all the time, and I hit 1,000% in between a couple days and 2 weeks, and I reset it back. I've gone from 100 to 1,000 in 5 days. It's just, I don't know. I don't think you have to really know everything about options to really play them.
You don't need
it's
to
experience though. Like SPY, you have to be a lot closer. You can't buy a $10 SPY contract, in my opinion, and
exactly.
And go to 90.
Timmy, just to expand off what you're saying, like that's from experience. Like, I know the Greeks, I understand them and stuff like that. But when I tell you, like, when I'm trading SPX,
do tell us about the Greeks.
Yeah, no, I don't personally like obsess over the Greeks, because just based on me trading SPX for so long now, I have a good understanding of how those contracts are going to move without even having to look at them. And essentially what it is, and in the shortest, sweetest way possible, if you look at Delta, which is one of the Greeks, Delta is your per dollar change in contract price. So if you have a 50 Delta, and this, you have, I don't know, whatever stock you want to look at, let's say it's $15. If you have a 50 Delta on a $15 stock, the stock goes to $16, you are making $50 on that contract. So essentially, for every dollar move, your probability of that ending up in the money is, say, 50, and that's why you're getting $50 per contract. Now, if you slide it over to the next one, which is Gamma, so Gamma is an add-on to your Delta. So let's say you have a 50 Delta and your Gamma is 5 cents, right? You move up that $1, you are now getting that 5-cent Gamma added to your Delta. So now you're up at 16. You already made $50. If you were to go to 17, you're now making $55 per dollar increase. So the Gamma is going to add after the dollar move. Lastly, I mean, there's others that honestly I don't even look at ever. The last one that everybody should kind of have an idea of is theta, and theta, again, it's a nice term to use, but again, like Timmy said, like, he knows if he's playing 0 days and he's sitting in the contract for a while, that contract's going to melt. But theta is your time decay. So if you have I don't know. Let's say we were on Lucid. So let's say Lucid didn't go bananas yesterday. Lucid's at $12, and the theta on that contract is 50, right? So for each day you get closer to being to your expiration date, you're losing $50 on that contract when you wake up. So your time decay is going to eat you up, just based on your probability of that contract entering the money or being,
that won't mean you owe now $50. It just means that you've lost.
No, yeah, right. So options, and this is why, when everything started to go down, I think a lot of people gravitated toward options, was because you have a determined risk when you enter that trade. So say your contract is $100, right? 1.00, you'll see it on there. So that contract is $100. You're not losing more than $100. Well, maybe with the fee, whatever the fee is, $1, whatever. But $100, that's your max loss. So let's say you have a put on Lucid for $10 that expires on Friday, and Lucid just goes crazy like it did yesterday. Your contract's going to 0, and that's it. You're not going into your margin. You're not going into the account. It's dead. The contract's done. Back to 0. but there is infinite upside. Now, that doesn't mean that it's going to happen that way, but if Lucid squeezes to $100 and you have a $10 call, you're going to be $90 in the money, and you're going to make a shitload of money on that contract.
So how much would you have in your margin account to start playing these contracts?
I don't even have a margin account. This is actually good.
Oh.
Cash.
This too.
Cash account.
Cash account.
Cash account, because one, for me, I keep $5,000 in my cash account. That is it. If I'm trading more than $5,000 a day, I'm probably getting greedy, or I'm having a really shit day and I'm gonna give back some. So I keep my account very low. You don't need these big accounts. And I'm also one to not try and make 30K in a day. Like, for me, if I can make, a set number at the end of each week, I'm more than happy doing that. I'm not trying to be a hero here.
If you lose out on them puts, are you losing? You're losing real money, right? So you're gonna.
Yeah, this is real money. Yeah. But again, like, you have a.
But are you just losing the contract, the value of the contract, or
yeah,
you just?
You're not going to be able to sell that contract. So if you're on the
right, so just because it just expires and you get no money, right?
Worthless. Yep. So if you're in the money at expiration, your contract's worthless, and whatever you put up for that contract, you're going to zero.
Interesting.
So that's the same thing. Like, let's say you have a call option, whatever it may be. Say it's $150, and the stock tanks. The actual price of it. We're not talking options price. We're talking Lucid's at $10. You buy an $11 call for $100, and Lucid gets absolutely murked, goes to $4. Your contract is zero because
but you now don't owe money on it. It's just
no,
that the contract's literally worthless.
Right. Yeah.
Okay.
Yeah. You're not gonna go in the
So it's a kind of a win-win, really, isn't it? You're gonna get some right, you're gonna get some wrong, and you learn from each one, right?
Yeah. No, they move quick.
Yeah.
Move quick. In terms, and also there's a clock on it. You have a shot clock where you have to buy a specific date for your contract. Whereas if you're just holding shares, you can hang on to that forever if you want, right? Katie, you have something to add?
Yeah. Did you get a chance to talk to Ryan last night after market bell?
I did. No.
All right. So, dude, you just had gotten off of club, and dude, we were looking at it, and I was like, yo, what I was looking at with SPX with Ryan. You guys look at ES. I follow SPX. I more tend to lean towards SPX and SPY, just because I have on both those charts, I have pivot levels. On those pivot levels, oh yeah, look, Ryan just popped in the audience, literally as we're talking about him. I look at pivot levels. I look at areas where price tends to get a little sticky, and that's where you have to start to see, like, if we break out from that level, we usually move to the next. We move to the next pivot level. We like to test those back and et cetera, go forward. It was getting towards close, and I was like, "Yo, let me look at our most recent pivot level I have." And so it's a pivot level we've been talking about all week long, that 4070 level on SPX, and we were trading about like 4090, 4092, and I was like, "Dang, dude, it'd be nice if we got like a nice little pullback to 4070." I tried filling for a 4070 Cobra. And I didn't get my fill. I missed out on the fill, and we watched that fill go from like I think it was like 25 cents. I was trying to fill like between 25 to 40, and it went all the way to, oh man, I think it went as high as 210, but I know for a fact it went to at least $1.80. So it's just one of those things, and that was like 10 minutes till bell. So like, or yeah, it's about 10, 15 minutes till bell. But yeah, that's a good example of, like, you got a 6x return if you got in at like 30 cents. But obviously, you're risking is the fact that if it does go to 4070 by expiration, 4 o'clock, your contract is 100% toast. But then it's one of those things where, you have to hit them if you're going to take them, or you got to be willing to lose, the money that you put behind it. So, trading with, profits that you made earlier in the week or earlier in the day, is just some considerations that you'd have to make there.
Yeah, move quick.
I recommend if you're going to trade options and you're new and you're going to trade SPY or SPX, do SPY and $100, because if you can't grow $100, which at the, you know, if you have a $1,000 account or 2 or 3 or 4, if you can't buy one contract and start growing that, then your $25,000 is not going to help you at all.
Yeah, I mean, yeah, I 100% agree. Like, honestly, I look at SPX as the liquid crack version of SPY. Like, if you can't manage risk well, like, you should be playing SPY. Like, SPX will chew you up, stomp you out, kill you, beat you up, and then it'll still try to take you out for a dinner. Like, because it still wants to grab your money at the end of the day. So, yeah, definitely, if you're trying to get into options, you're still learning options, take SPY. It moves a lot slower. The contracts are better priced, you know, for smaller accounts.
If you start off with SPX, get some testosterone shots, because it will take your manhood quick.
Yeah, it's like bull riding in a sense. Like, jump on the bull and see how many times you can, you know, play until you get bucked off. But
yeah, no, options are, especially for the scalpers, you could definitely make a lot of money. You could also lose a lot. So the risk management, if you don't have it, you know, get you into some trouble. Absolutely. But if anybody's down below and you have anything you want to add or anything, feel free.
You're just losing the money you're putting in, right? So,
yeah. So you're never gonna go, like, you know, if it's
negative.
Say you pay $100 for a contract, your max loss is 100 plus whatever fee.
Yeah, of course, yeah.
You know, buy the contract. But yeah, no. So that's why, like, when things started to go bad, you know, in 2022, people were playing the downside. I mean, look, if you went naked short, where you're shorting shares, right? And you got murked and things started to go in one of those bear market rallies, you know, you're underwater and you could owe more than what you have. So that's the danger in it. Whereas options is like, if it goes against you and you don't have any risk management in place, you know, at least, you know, your max loss is going to be whatever you paid for that contract.
Here's how fast it goes. So I use SPY to trade SPX. And I post almost every day the levels. Well, yesterday I was at my level, and whenever I'm down 7%, I automatically start looking to get out, because I know that I'm wrong and it's going against me. And you can go from you can start looking at 7%, and by the time you hit that button, you could be down 20, 30, 35%. And I mean, in just seconds. That's on zero dated.
And if you have a shitty brokerage, you can get where you enter a trade and you're already starting down. You're like, what the hell's going on? You can get it just trash fill, like Robinhood. Robinhood gives you some real trash fills on there, so you can actually enter a trade and, you know, start.
Isn't it so ironic that they're called Robinhood?
Yeah, no, exactly. I mean, you know what? It is like,
I mean, I'm English and he was from the UK.
right.
the whole folk story, and it just absolutely makes me livid that it's like, it's meant to be like this guy that takes from the rich and gives to the poor, and it's Robin Hood's quite the opposite, you know. It infuriates me.
Absolutely. And it's just like, you know, it's the, you know, zero commission trading, blah, blah, blah. Like, that is, you know, attractive to the eye. But then you look at it like,
yeah, but there's many other trade places you can trade.
Oh, look, I use one, and, you know, there's not an ad for them or anything, but I use Tasty Works, and honestly, I never have any complaints with my fills. Like, if I'm putting, you know, specific price for it, I'm getting it at that price. Yeah, I got to pay $1, whatever it is, for, you know, the commission and everything like that. I'm okay with that in terms of me getting in at a worse price, which is infringing on where I want to get out, you know, because then it's you're chasing for break even rather than chasing to make money, I guess, you know. So yeah, no, it's different in that sense. But
hey, I used to use Webull. I chart Webull, and I used to use Webull, and I started sizing up, and one time I took 50 contracts, and I market order in like 15 at a time. And then if I, but I was automatically down $1,000 or $1 a contract once I got filled, and it never moved. Like it was just sitting there pretty much filled. Should have been filling at the exact same price, and I was down $5,000 just at the start of it. So I moved my money out of Webull. I know a lot of people love Webull and they don't have that problem, but I don't know. I've had that happen a few times with Webull.
Yeah, and that's another one. Webull's one where they don't charge you substantial fees for entering trades and stuff like that. But it's a give and take. It's like, would you rather the price that you wanted to buy for it, or to not pay the couple bucks in fees? I mean, I feel like, especially when you're going in with size like that, you're not paying $5,000 in fees. Like that's a slippery slope right there that you don't want to get into. But we have futures trader here. He wants to talk a little bit about futures. What's going on, man?
Hey guys, can you hear me okay?
Yes, you got it.
Hey guys, so I know you guys are talking a lot about option, and I follow along with you guys in the Discord doing options and stuff. Um, I mean, I've done it all. I've done commons, I've done options, I've done futures, and for me personally, I really like the futures. So if that's something that any of you guys are interested in, I'm happy to share a little bit more information about it. I find it to be a little bit easier than options because we're not dealing with the grease, we're not dealing with the theta, we're not dealing with the gamma, the delta, and we're not dealing with the IV crush. So I know exactly how much I'm going to be making off of every single point every single point that we're moving in a particular direction. The other thing I like about it is it's a lot easier to manage risk on it. I can set a specific stop loss at a specific price, whereas with options, you can't do any kind of like trailing stop losses or anything like that. So if anybody's interested in knowing more about options, I'm happy to, about futures, I'm happy to share more information about that. The other nice thing about your futures is that your contract will never expire. So if you happen to hold your contract and you want to hold it long term, you can. What will happen is every 3 months your contracts roll over. So that's another nice thing about futures versus playing options is you're not going to have to deal with the expiration. You're not competing against time as well. Me personally, I don't like to hold my futures long either. It's just like you guys do with your option. So I'm pretty much playing it the same way that you guys are playing your options as well. So I don't know what experience any of you guys have had doing that.
Yeah, no, it's funny. We just talked about this yesterday where it was like, we were talking like, imagine if you can enter and exit options trades using those futures principles where you're actually stopping at a price on the chart rather than the price of what, the contract is telling you. We were just saying that yesterday because I do like trading the futures, and there's a couple of them that allow you to directly incorporate them into TradingView. So you could literally just on your screen place your stop, take profit, whatever.
Right.
And yeah, it's super clean, man.
Yeah,
for sure.
And the other thing I like using is a bracket order. So in other words, what happens is I have a stop loss, but then I also have a target point, based on what I'm doing with my level. So if we're at 40.75 on SPX, and I know I know it's gonna run up to 4,100, I can put a sell price at 4,100, but I also can have a 10-point trailing stop loss in case something happens and we don't quite make it to 4,100, and all of a sudden there's this big knife that comes along. I'm out of the trade, and it's stress free for me. I don't have to worry about it. So I've already put in my risk, and I've already put in what I want as my reward, and let the trade do its job.
Yeah, I love those OCO orders. I use them all the time. The bracket orders is honestly one of the best things that was developed for markets. It's basically you get to self-contain your risk in the options contract. You can only lose a maximum of your premium, but even that you can also set your stop losses in it. It's great.
Right. So
serious question on futures, and I don't know anything about futures. If you hold a contract long enough, so I've heard they will, like if you bought gold, gold futures, that sooner or later you actually buy that gold.
Well, you're basically trading off of a commodity. So I mean, one of the commodities we're trading off of is the index fund. So like ES, we're trading off of S&P. You can trade other commodities as well. I mean, there's futures. You can trade coffee, you can trade corn, you can trade oil, you can trade all of those things. Now, my recommendation is that if you have a big loss, the issue is with futures, you do need to have a margin account. So the option with that is that you can be margin called on that, and the bank can call back that contract, especially if you're up, you're down big on it. The bank is going to protect themselves when it comes to that. So certainly, that's why it's important to manage your risk. And we're playing with the same volatility as as you guys play with option. It's just that it's a lot easier to know how much we're going to be taking as far as loss or profit. So.
No, I love it. Thanks for that insight, man. I have a futures account. I don't touch it as much as I should. I noticed that late at night or when the futures market opens up, I was taking trades and I just like always would get stopped out just because like overnight the volatility obviously is not as good as it is intraday, and unless it's like a Chinese market open, London open, whatever you may whatever.
Right.
But
the other nice thing about it is if there's news that happens after hours, we can play off of that volatility. So if there's any kind of like geopolitical news, war or any actions that happen, we can take advantage of that outside of market hours, using futures. The other thing is that, for those of you that might have full-time jobs that might not be able to pay attention to the market all day long, you can play futures in in the late evenings and nighttime and early morning, and then go about your day.
Yeah, no, absolutely, man, for sure. But
Yeah.
if anybody down below, you got anything you want to add, just request the mic. I'll bring you up. Anybody else up here, if you got anything, floor is yours. But probably start to wind down here. All right. All right. Well, thanks for joining, guys. Appreciate it. We'll be popping back on here from time to time for sure. But wanted to hop over. Oh, Lion, you got something? Sorry, I just saw you requested it. I'll add you up here. Oh, it's gone now. Are you up here? No? All right. Well, anyways, guys, good talking to you as always. We'll catch up tomorrow night. And
Me okay?
yeah, I hear you. What's up, bud?
So you might have already talked about this while I was off, but what are you specifically looking at next week or Monday?
It's one of those tread with caution types of weeks. I'm just gonna mute your mic. It was a little feedback, but tread with caution, of course. So much data coming out, and with the earnings, honestly, I don't know if anybody other than people who work for the companies are going to tell you how they performed. So it's not going to be me to say it. I got no clue. Another one of those weeks where I'm definitely not going to be holding a lot overnight. But yeah, no, I mean, it's going to be interesting. I do think there will be quite a bit of volatility. And just to take a look at, my daily chart at least, we actually grabbed some liquidity over that 40-80 mark, and that's what sent us down. Common retail would believe that would be a breakout when in fact it is not. Another reason why I'm not big on technicals, because how many times have you heard, oh, it's a fake breakout? Well, I don't like fake breakouts. I mean, if I'm planning my whole trade, I'm risking good money on that. To me, I'm not a fan of a fake breakout. I would like to have some substance behind it. And essentially, like what we did was we attacked previous high, and above that, those people who shorted that high, they'll have their stop losses in that vicinity. So essentially what the market's doing is taking those stops just to send it back down. So yeah, we've reached over that on the daily. We did create a bullish imbalance down to 40.57. So in that area, that is a level for me that I would be looking for a potential bounce. This would be our 4th test into a bearish imbalance that was formed on August 26th. So that was kind of the start of when J. Powell went hawk. There are a few more bearish imbalances above, but that is the most recent one that I'm going to continue to watch. And obviously it's going to take some time. It was a large one. This one goes from 41.42 all the way down to 40.65 on ES, I'm talking. So big bearish imbalance. We have that level that I just mentioned at 40.57, and below that we have 40.39. That would be the bottom of that imbalance to get filled. Following that, we had another one, and this one's quite far away, that we actually got into on Wednesday and bounced from with that long wick. That was at 39.80. So that's another one. That one has already been tried. Just from experience and watching, oftentimes, when it continues to keep getting tested, that's not ideal. They usually get broken down at that point. But we had the one test. We have not tested this 40.57 level. So if we are to pull back down to there, that would be a place where I'm looking to, potentially enter on a bounce play. But yeah, no. Next layer of liquidity I have on the daily is 41.80 on ES. That was a long wick from December 13th. There was some sort of data that day, meaning that we ran up high up to 41.80 prior to closing the day, about 130 points lower from that high. And that kind of set us on that downside path through Christmas and earlier on this year before we started to get some legs. But so yeah, I posted that chart on Twitter too if you want to take a look.
I think that was CPI.
Yeah, it probably was CPI. Oh yeah, it was 12.13. Yeah, 12.13. I think that was CPI. You're right, and it was a Tuesday. Yep, Tuesday. So yeah, no, those data points are wicked, man. I try to avoid them. I mean, if you're on the right side of them, great, but if you're not, it's tough, especially when you're trying to get out of them, man. When those contracts are running against you, it's tough to get a fill. So, but all right, well, that's all I got today, guys. We'll talk soon, and enjoy the weekend.
Yeah, you all have a good one. Risk management.
Yes, sir.